Good morning or good afternoon, depending on where you are in the world. It's January 13th, and it's time to take a look at the market and see what we could do trading wise this week, and also, of course, talk a bit about what happened last week. Before we start, though, as always, I need to stress that financial markets trading is unfortunately high risk, and we may lose all of our invested money. I'm going to share my opinion with you. My name is Alejandro Zambrano, and I have been trading since 2006. But it's just my opinions. It's not an investment advice or recommendations. It's here to broaden your view and support you when you make your own decisions. Okay, so let me see here. So if we look here, the US dollar outperformed all of his peers last week. Okay, and I think that could continue this week. Let me explain to you why. Well, the data from last week from the US was very good. The ISM services beat expectations and reached 54.1, which is a high number. JOLTS, job openings, has been trending to the downside, but the downtrend has now stabilized. Maybe we are on our way up, because we had a jump from 7.84 million new job openings to 8.1. All right. So if you guys ever wanted a job, well, you know where to look. Moreover, ADP numbers, which is like the from payrolls, but produced by the company called ADP, come in slightly low below expectations, but still at a solid 122K. And jobless claims, which is the weekly data we get, which shows how many people are applying for unemployment benefits. Well, that was at an 8-month low already. Okay, it was already at an 8-month low, and now last week it dropped even further to lows we haven't seen since February 2024. So there is more jobs in the US, and there's few people losing their jobs. Now, cherry on the top, well, on Friday we had the non-farm payrolls, and the non-farm payrolls, they were showing that we had 256,000 new jobs, all right? And this was up from 212K last month, and also beating the expected outcome of 164K. So overall, very good numbers. What else? Because it doesn't end there. Well, the unemployment rate dropped to from 4.2 to 4.1, where people said that we could possibly have a push to the upside there. So things are looking really good. This on its own is enough to keep buying the dollar, because at the same time in Europe we have expectations that rates are gonna go from 3% to at least 2% by the end of the year. Some people even say 1.5. What else? While the unemployment rate is low, there's signs that maybe the labor market is slowing down, and we have all these tariffs that are probably going to kick in soon, and uncertainty that is not really good for the euro area. If that also was not enough, so we know that tariffs are coming in. So we have what we call universal tariffs. That's when they're going to say, all right, we're going to pay 10% to 20% on all goods from, say, Mexico or Canada or the EU. Doesn't matter if you're importing like medical equipment, medicine, or you're importing a toothbrush. Okay, everything is taxed the same. So that, if that would be introduced, sorry, there was talks that we would have less of that, speculation that we would have less of that, and that we will probably have a situation where this more targeted, a targeted approach would be that they put certain tariffs on just cars, sometimes even cars of a specific type, like a brand or electrical vehicles, for example. But Trump rejected that, and immediately we saw the dollar gaining, and immediately it weakened stocks and crypto. And most likely we'll see even more than that. So Also, geopolitical tensions. Greenland, is it up for grabs? Well, the US thinks so. This is creating a row between Denmark, EU, and the US. Also, I'm guessing they're joking, but maybe they'll turn into reality. But turning Canada into being part of the EU as well, or the US as well. We're joking now, right? But this is how people start to then be like, oh, we want to go out and create an empire, right? I mean, this is exactly what people were doing. Not like, I don't know, well, 1940s, when people wanted to just build an empire, I guess. So this is obviously not great, okay? And we'll see what happens. But yeah, this is happening as well. Elon Musk, which is obviously working with Trump now, he had a live stream on Twitter, on X, with Germany's biggest far right party, and he's also tweets that um, Nigel Farage from Reform UK, which is the far right party of, I wouldn't call it far right, but anti-migration party in the UK, that Nigel Farage needed to be replaced. And as well, there was some comments as well that Keir Starmer as well maybe wasn't up for the job. So there's a lot of what people would say meddling, and yeah, there's a lot of things happening on a geopolitical thing tension here, which is not very normal, and that of course the market doesn't like. So in short, I think dollar gaining more because of all these different factors. Stock markets will probably continue to be weak, and also crypto. What data can you focus on this week? Well, we have UK data on Wednesday, UK inflation figures at 7 a.m. London time. And then you have US inflation figures as well. And the US inflation figures is the most important one. Inflation is anticipated to jump from 2.7 to 2.9. If this would indeed happen, then that obviously would not be great. That's just going to lower the probability of rate cuts even more. And that could definitely weaken the stock markets even more. Then you have a bit more data, but it's not really that important. It's enough for what we know last week, and the inflation figures from this week. Now, this is the key thing. On January 20th, there's going to be about, well, rumor says there's going to be maybe 100 new policies implemented, which would, we just need to wait see what's going to happen. But Trump has much more power on trade and migration policies. So I think that's really where the market's going to be focusing at. And we'll see what he says. As I mentioned before, universal tariffs in general not good. So if we don't have anything on that, then that will be amazing. And migration as well, like how many people would like to deport, and who really, if it's just the bad hombres, like he says, or if it is, people that is contributing to the economy and done that for many years, then that's obviously something different, okay? So that could probably drive inflation. But the question is how they're going to do it. Are they going to say that they're going to deport 500,000, 1 million people in 1 year? Especially if it's 1 to 2 millions, then that obviously is not good for the economy, not good for inflation. But what if it's slightly less? Then there is less risk for the economy. Okay, so that's also what we're looking at there. Okay, we need to pay attention to all of this, and ahead of this event, everybody is a bit afraid. So I'll show you here in stock indices. This is the S&P. So the S&P dropped below 5,800 now. It's below this level, and it's probably going to push towards 5,679. And then if people really get panicky, we can go down to maybe 5,500. There's a lower run here in September last year. And so if we would go down before he says anything, then that would be maybe an opportunity again to maybe take on a bit of risk. Again, you don't want to risk with people money you cannot afford to lose. But the idea would maybe to let it drop a bit. And then if he doesn't say anything crazy on day 1 or day 2, we'll go back up again, okay? Most likely. Alternatively, if we're still lingering around here, then people are going to be waiting. Okay, is he going to say something out of the ordinary that can hurt people's wallets? Then yes, if it's like that, like universal tariffs, we'll have that drop, and then we'll see how far we go. Alternatively, if the day comes, nothing really happens, and things just push to the upside, like breaking 5,918, then I would like to be a buyer, really. Overall, his economies, like the tax cuts, will be beneficial, but tariffs, migration, economically not beneficial for stocks, by the way. How about crypto then? Crypto stuck in a big descending triangle, but also big head and shoulders with a head left and a right shoulder. If we break here, we can go down to 75, 78-ish. But given the overall positive fundamental backdrop, I wouldn't really be looking for this to go back to like 72 or so, even though the pattern suggests so. So I think we probably need to break here, go a little bit lower, and then again, if he doesn't say anything crazy around 85 or 80k, ideally 80k, then I would buy a bit. Personally, again, I have a very high risk tolerance. I will buy a bit, and then maybe for this to go back to 90, maybe 100. But then I think what's happening here, it's not just gonna be he takes power. Then we need to see if they're gonna do that Bitcoin reserve. Now, probably they might do that. You have Michael Saylor from MicroStrategy attending a meeting with Eric Trump. Was it like 10 days ago, something like this? Yeah, 3rd of January actually. And so with that in mind, I think what could happen here is that we'll probably have that, but we need to see some of that. So we need to see steps towards that, because otherwise people are not going to be buying. If nothing happens on crypto over the next 6 months, it's not going to be a fun time. If none of the regulations, if none of these whole changes are implemented. How about EURUSD? So EURUSD is a very simple story. So bearish below this level, we can go up. People are going to sell, push to the downside. I think it's a matter of just, maybe having a 1 or 2 day correction and then short selling that. You don't necessarily want to short sell on the lows here. You want to sell at good reasonable levels. You're dealing with a downtrend. So bounces and selling. Here's Brent crude oil. So last week we were trading here. I said we can go upwards. We are trading up here right now since I did this chart, which means that probably around above 77.50. So around these levels, people are going to be buying. So if we're trading here, might go down to 79, but then up again, I would argue. And then S&P 500, it can be shorted here for this to go to the downside, even though it's very risky. I think what could happen is maybe down and then up, short selling, and then down. Is it an easy trade? No. What's an easy trade? EURUSD is an easy trade. And then possibly in Bitcoin, maybe short selling here for this to go down with $5,000. That would also be quite easy, I would argue. Gold prices. So gold prices I have here, but they're trading sideways. There's not a good pattern here to work with. We're definitely in a short-term uptrend and we can push to the upside, but the preference would be for this to go up, stall at 2,721, and then go down and then break higher maybe next week, especially if tariffs would be introduced. What we could happen here, I'm not sure if it's going to decouple, but if tariffs are indeed introduced, dollar up. If dollar goes up, it's not going to help gold, but if people think, oh, just being in dollars is not enough, I need to hedge myself against inflation, then maybe gold could join in here. But I'm cautioning here. There's always been this talk that gold is an amazing hedge. There is, to some extent, there is an amazing hedge over long periods of time, and I'm talking about really long periods. In the short term, I have seen many times how stock markets are dropping sharply, the dollar is gaining sharply, and you know what, the gold is tanking as well. So, it's not like stock markets decline and this goes up. So it's a tricky situation. We would just need to stick with the technicals. That's why we have stop loss and entry and take profit orders, right? The technicals tell us what to do. And what the technical tells us right now is that we're trading sideways, and we probably need to trade sideways for a bit longer. With that in mind, we're going to wrap things up. If you have any questions, just let me know. If not, we will be finishing up. Let me just check here. Okay, so it looks like we don't have any questions, which is all good. If you do have any questions, let me know. You can always just put them in the chat. And moreover, if you watched the recording, don't forget to hit like. It's really important. That means that more people see it on their timeline, and that tells us that we're on the right track.
The recording, don't
And we'll
forget to
produce
hit
more
like.
content like this. Thank you very much, and have a great trading week. Goodbye.